Good morning, traders. It is Thursday, August 22nd. Taking a look at the charts. eSignal still hasn't activated my data feed. They've made some crazy error and messed up the account. So I am still working off some pretty basic charting here, but charts all still stay the same thing. More or less looking at the indexes, we got the Dow, the SP 500, NASDAQ. If we look at yesterday's price action, strong recovery there yesterday. Everything is testing these recent highs from about a week and a half ago, and today the markets are moving up about a 1/4%, and we're on the verge of a major turn point. We've been talking about August 19th being a major turning point in the market, and short term, the trend is still down, and we are expecting the market to roll over, excuse me, and put a leg to the downside. But the turn date is based on cycles and several other things. And if a cycle is broken, obviously that turn date means it'll go the opposite direction. And we are kind of sitting in limbo with really no positions other than a small inverse ETF on the SP 500, because whichever way this breaks is going to directly affect all asset classes. If the market rolls over, we're in position to start profiting from there. We'll be looking for new trades. If the market does break to the upside, then we're going to see obviously the safe havens collapse in price, and I think we could see a very explosive move to new highs or potentially the test of the recent highs in the Dow and the SP 500. Money will flow into stocks and out of the safe havens, and we've moved out of the safe havens. We've locked in lots of profit there over the last couple of weeks, and now we're back out. And if the indexes break here, we want to be out of those, and we'll be looking for a new entry point into the precious metals, bonds, whatever the safe haven asset class we move into next, once the stock market reaches another overbought territory. So let's just take a look. Let's move over to the dollar real quick. The dollar trading lower today. Considering the dollar's trading lower, we're actually seeing metals move lower as well today. If you look at metals, gold down 0.5%, silver down almost 0.7%. And this is telling me that more or less money is expecting the stock market to rally. That's what the sentiment is right now. If the stock market breaks out and rallies, we're going to see metals and miners really pull back and have a deeper correction. And we could get into a three-wave correction, something that lasts several weeks, or it could only last be some type of washout low. But overall, money is getting fearful. It's moving out of the safe havens, even though the dollar is falling, and they're worried that the market's going to break to the upside. So we are waiting for the markets to make a move here before we get overly positioned. It's all about managing risk during big turning points. I know a lot of people want to trade the key turning points, but you got to keep in mind key turning points have explosive moves, and if you're on the wrong side, you lose a lot of money within a couple days. So we're not about risking money; we're about accumulating and slowly building our wealth over time without huge gambles and risks in the market. Now let's take a look over at bonds real quick. Bonds trading lower again today as well, so money is flowing out of this safe haven and into equities and pre-market. We'll see how things shake out there. Overall, we go to energy sector. Oil had a nice move up there yesterday, ended up coming back down to close. Today it's moving higher again. It is struggling with resistance. If we were to just draw on this chart, we've got this resistance high right across here. It is still struggling with this resistance trend line. It's going to have resistance across this previous high. It's going to have more resistance over here. But more or less, if it can break this trend line and break this previous high right here, if we can get up into this point here and close up there, that would be the sign that the market is now making higher lows and higher highs, and we could continue to see it go up to the 60, 61 area, which will act as the next key resistance zone for crude, and see what it does from there, whether it's going to chop around in a big range or if it's going to break out to the upside. Taking a look at natural gas down here, obviously yesterday reversed back down a bit. It's still making a series of bear flags where it sells off, forms a bear flag, sells off, forms a bear flag. In fact, if we go to the monthly chart of natural gas, you can get a real feel of the trend. You can see we had that big winter spike, that big spike last year in natural gas, and it went all the way up to nearly 5, came all the way back down. Now we're down tested nearly 2 a couple weeks ago, and we're just in this constant bleed out. There's so much natural gas out there, everyone can produce it. They're pretty much giving it away at this point, and more or less it's just continuing to fizzle out. And the trend is down, and we're not looking to get in just yet. We're looking for some type of bottoming formation to happen, but at this point, again, it is channeling lower. It is getting close to some long-term support, so we're not too excited about getting short at this point, but looking for a major bottoming opportunity to go forward from here. That's it for this morning, and I'll keep you updated as things unfold. We're kind of waiting for this mid-August or end of August reversal date. Obviously, nothing moves really the day of. We've kind of been expecting this cycle top to unfold for about a month and a half now, but I know some of you have been betting on our August 19th play with pretty huge money in all your portfolio getting short the market, and some of you are upset that it didn't crash on August 19th. And again, I can't state this enough. The market, we don't know which way the market is going. We follow the market as technical traders. And that's why we're not in any real positions right now. We've got our toe in the water to the downside. That is it. We need to follow the market, not try to outsmart it and do huge bets against a forecast going forward. So let's just stick tight, follow the market when it happens. The market may not roll over. We have to follow it. That's the whole point of technical analysis. We can try and predict, and we can write some interesting content on it and what we think is going to happen. But when the time comes, when push comes to shove, if the market rallies, we're going to get long, and we won't even skip a beat about the drop we were expecting. We'll just get long and go long from there. So try not to get caught up with long-term forecasts and predictions. It's totally different than active trading and managing risk. So those are two big things everyone needs to take away. Is you can't just follow forecasts and especially long-term ones and expect something to happen on that day. I mean, this is a 10-year bull market. You can't expect us to say August 19th is going to be the dead top. It's going to drop that day, and you change your whole financial outlook based on one day. We can't pick the exact day. We're just basing things off analysis, cycles, and whatever happens, we trade it. We don't just trade based on hope and expectation. So hopefully everyone can kind of understand that we're traders. We're not gamblers betting on forecasts. We follow the market when the odds are in our favor. Anyways, that's it for this morning. Talk to you in a bit. Bye-bye.